Hey guys, so this is a trading review for exercise number 1, the trading naked drill. The first thing you'll notice in the background is that you're hearing PriceSquawk audio. PriceSquawk's just generating sounds equivalent to the information observable in your DOM with your eyes. I have it turned on mainly for the benefit of those interested in using PriceSquawk while they trade. You by no means need to listen to the DOM information to achieve the goals of this exercise, or you could enable your X-Trader trade sounds or Jigsaw Recon tape trade sounds to complement the DOM, as long as the audio is only conveying the same information observed in the DOM. Just think of it as having a trading mentor or an extra set of eyes looking over your shoulder, pointing out order flow events as they occur in real time. The idea of the trading naked exercise is that we are focusing on the real-time market auction, in the market auction information contained in the depth of market or ladder or order book. Adding an audio component to echo that information, such as the prints and volume flow, is not going to conflict with the trading drill, and I think for a lot of traders it's going to help your learning curve actually. A lot of visual information still even slips past my visual acuity, such as large hit or lift trades and how much is trading at the current prices and so forth. Whether a large trade or trader just swept a couple of prices. I guess some people are more cut out to process information visually than others. So adding market audio helps me make up for that. So this has been a pretty low volume context. The video after trading the whole session shows that, of course, in that first hour there isn't much volume trading. But the first time you bring up a DOM for your market, you may not have that perspective about it. So there's nothing wrong with taking trades in a low volume context initially, but you'll quickly learn that it's hard to get a read of the market, whether buyers or sellers are more in control, and where some decent prices are to lean on without there being enough volume. So as we pointed out in the 1 minute volume chart review, I take a number of trades. I'm convicted in my shorts here and try to sell the market as it grinds all the way back up. And if there's one trade that I should have known better about, is this one here in that first half of the session. The market's grinded all the way back up to the current session's highs, and I've blindly gone in trying to top pick here without much justification. The sort of things we'd prefer to see is a test of the highs and then some absorption, and then sellers come back in and actively hit the bid, but instead blindly leaning on prices and suffer the consequences of that. So, short again. This should have been the previous trade. We've gone to new highs, a little bit of absorption. But we're just learning from our trades here. So we're going to implement some rules in the next session that will hopefully eliminate some of these rookie trades. And we're going to gather more evidence and justification for taking trades as we learn to read the order flow. So buyers and sellers are more active now. Stocks have opened. And after that meaningless grind back up to new highs, the market's now cycling back down. You can see in the jigsaw DOM here that sellers are much more active. And there is a bit of momentum there relative to the earlier in the session, which has me in this next trade thinking, all right, we might finally test those lows and trying to get short. So we've had a little bit of a retrace with buyers getting more active in the market, lifting offers. Now here's some order flow that you'll be able to pick up in all markets. And John at No BS Day Trading is really good at talking you through these sorts of things. So I'll just mention them briefly to give you some ideas for your market. You want to see volume trading at prices and being absorbed at prices, because the big traders, they're on the bid or on the offer. And what we're basically trying to do, if we're trading the order flow as we primarily are in these drills, is to get an idea of what the big traders are doing and jump in for a little bit of a ride and try and take some ticks without being against trading against those big traders. And to identify where they're trading, we never truly know, but absorption is one good sign. Now, if you see some large buying or large selling at market, like that can always be the other half of an auto spread, which I won't confuse you with now, but it's still information that you can take in and observe that, okay, 100 just lifted the offer and the offer didn't budge. So there's obviously a seller that's got a larger order, and that can usually be uncovered via, I guess some people call them iceberg trades. The large seller being able to absorb the buying momentum, short-term buying momentum. And for minor pullbacks, it's good to see a bit of that sort of activity occurring. So as we saw, the market traded down with a little bit of selling momentum. Buyers came back in, either profit taking or we don't know their true agenda, but the market's traded back up and sellers are absorbing that buying momentum. And the next thing is buying or selling drying up in the pullback? And those are some of the things you can look at to form a bias. So that pullback occurred and sellers came in. I believe I went short at market. I was pretty convicted that the market's going to trade down. But there was some absorption and took a quick scratch. So that's another point worth noting. If you have an idea that if you're getting in without the ideal low risk entry, which means you have a price to lean on, where pretty much the line has been drawn in the sand. Sellers and buyers have agreed on this price in a sense, where it's easy to know if you're wrong with just one or a few ticks going in your favor, going against you. that would be an ideal low risk scenario, and that gives you a little bit more wiggle room as prices trade in your favor. But if you enter at market like I did in that last trade, where we really had 53s and 50 up to 55s as where that absorption was occurring, and I got short at 51s. So the market can easily grind back up to that previous absorption and squeeze me out of my short idea. So if you do take a trade like that, it generally pays to be quick, quick to exit if conditions change. So that was a pretty good scratch based on getting out quickly if you're wrong and you've got a bad risk reward ratio. So instead I started thinking of working offers back up where that previous absorption had occurred. But we see some action trade now where buyers really are stepping up, absorbing at the bid and starting to lift. And with that in mind, next trade is a bit of a short. Work the bids for a long, get a fill. One could argue, is it a low risk entry considering we've traded down at 44s to 47s? But that was really on very low volume in the early session, so I wouldn't personally put much weight on that information. We've seen buyers get involved here. Some large buyers lifting. So information to help me be a bit more convicted, and the market's traded back up. I've got a few ticks to have a free look at how this short-term buying momentum plays out. I'm being a bit of a smartass there and working offers across prices. Nothing wrong with that. It's always good to practice working the bids and offers and notice how your Q position changes. The Jigsaw Dom's got a pretty good Q position estimator here. But I also, as you'll see, I get filled at 55s. Pretty quick profit taking there, but the mentality I've had four losses and a scratch. It's good for the psychology to get a win. And immediately I'm starting to look for longs. Buyers have come in. Short-term momentum is on the buying side, according to my present read. Actually, I got short there. Can't quite recall my thinking other than, I suppose, the buying is in the context of a pullback. Buying did dry up a little bit from as we rose higher. But it does, now that I've looked at the video, seem like a trade that there really wasn't much information to jump in so quickly for that short. So, and volume dries up a little bit, so it could go either way here. And I had to puke out of that as the market trades up to the highs. Buyers really seem in control here, and the video is showing that I'm pretty convicted on my short for the session still. So now we're back in the middle of the session, and I've flip-flopped to going, all right, we're going to have a go at those highs and work for a long, get along, immediately looking at having to defend or minimize the damage, but have seen some absorption, got some prices to lean on, and the short-term buying and selling has given me enough of an idea that, all right, we might be on a pullback here and we're going to test these highs. Market does grind up. This is a good position to be in because I now have 5-6 ticks in my favor. Now the market does zigzag, so it's going to come back down at some point, more than likely. But that sort of trade, you have a free look at the highs. Of course, I don't take that free look. We can really notice the sellers starting to come back in now. I've just taken 5 or 6 ticks on the long side. Time to step back, I would think, and see if sellers have got control. So we want to see absorption, at least a few thousand contracts trade across
3,000 absorbed.
these prices, which we're told they have. And we're up at the highs. Volume appears to have dried out. We've seen 3,000 trade at 67, which means there is a seller up there, or someone cashing in their chips for the session. But also, if prices push higher, there could be a lot of people offside, and that's what we actually see in this case. There is a puke out. Not a good position to be in when we're testing highs. PriceSquawk reminding us that there's been some volume at these trades, at these prices. It's always good to have your mouse where you want to click, especially if you need a quick exit. Really want to see sellers come in force here if they're going to defend these highs. Few ticks in the favour. So would have been rubbing the brow at this point. But we know from the 1 minute chart review that something interesting happens here, and that's probably worth pointing out. We're a few ticks in our favour. I'm even starting to think of taking those ticks. So sellers have managed to get it back down, back into the day's range. Selling has dried up to some extent. Where to next? No one knows. But we just hear a buyer come in, step in, lift the offer. 200 lift the offer. We don't want to see the market trading back up that easily, especially when there's the potential for a few thousand contracts to have to puke out as we go to higher prices, and that's exactly what happens here. Oh, and you can see that sweep to prices occurs very quickly and can be a showstopper for your trading week. Now I'm looking for another trade in here. The markets went to highs, looking for longs on a pullback. Once again, you want to hear signs of absorption. Perhaps you want to... And the market's on up, managed to take some more ticks out of that on that long. Thinking of going short. As you can hear, I've simplified my trade sounds to get an idea of selling versus buying. And managed to take a few ticks short out of that move, and that was it for the session. So first half of the session traded pretty poorly from the review. Wasn't much volume to justify trading. Second half of the session, I did at least wait for some prices to lean on, mainly identified through absorption and the selling versus buying aggressiveness. And as it turns out, I managed to dig myself out of the hole built in the first hour, which is always a good lesson to learn. But more importantly, we want to eliminate in the next trading session some of those rookie errors that you make. And reviewing the video in this way can really help accelerate that learning curve. Next time that the market, for instance, is trading at the highs and you're thinking of working a short, you'll probably remember that, well, you know what, it's very likely a game's going to play up here, and they'll try and do a stop run on all of the shorts. So you may have, and hopefully will have, a little bit more patience in trying to get that short fill, and hopefully at higher prices. So anyway, that's just a few ideas on what your trading review could look like when looking at the video. I know John at NoBS Day Trading is a big fan of doing video reviews. If you've ever observed experienced traders taking trades purely off information available in the DOM, for instance, I don't know if anyone's taken the NoBS Day Trading live webinars or watched some of the AXA Futures live feeds, or even just had a mentor review the trading session with them. You may have noticed that these guys have a hell of an ability to point out details such as large trades firing off and how much volume was just absorbed at prices at the end of a quick move. And for a lot of traders, especially those new to watching the DOM market auction like this, I think trade sounds are going to help you focus better and pick out certain trading activity patterns more accurately and consistently. Of course, on the other hand, it could be a hindrance to some who get distracted by audio. So entirely up to you. So cool. Record your video of your trading session. Do a review over your trades. Try and learn something for the next session. I won't do too many of these as I don't want to pretend to be your guru on trading the markets. I just want to show you how best to go about these trading drills and some good habits on your review processes. We'll look next at the trading exercise number 2.